But we also have RK Forgings on our radar. We have Mr. Lalit Khetan, the CFO and ED, joining us to talk to us about one of their latest acquisitions plus what's brewing in the company. Hi Lalit, season's greetings from the ETNR family. Hope you have a happy new year and Merry Christmas. But let's begin by this latest acquisition that you've done, ACIL Limited. You've got the NCLT approval for it. Talk to me about when will the actual deal fructify in terms of merging of books, and what will it do to your revenue and margins?
Good morning and Merry Christmas to all the viewers of the ET Now. Yeah, so about ACIL, this order we have got only last week, and we have 60 days time to make payment and acquire the unit. So we will do that much before that. I hope by end of Jan and early Feb we will acquire and complete this acquisition.
Lalit, what's the significance of this asset that you paid 110 crore for? As in, how can you turn it around over the next 2-3 years and integrate it in your current business? What's the potential?
See, I think it's a lot of synergy with the current operations of Ramkrishna Forgings. This is a machining unit, machining of crankshaft, and this is mainly in the farm equipment industry. So machining unit needs the forging. Forging will come only from the Ramkrishna Forgings plants, and that will optimize our forging capability, forging capacity. Further, a lot of cross-selling happens because the customers they have, we will have the foot in those industry and those customers. Similarly, those products can be offered to my existing customers also. So all this will help us in fast turning around this unit, and we hope to be profitable in the very first year of operation.
If we were to put it a little more simply, this 100 crore investment can yield you revenues of how much in the next 3 years?
So, see, if you look at the third year operations, we can go up to 400 to 500 crore of top line. We will start with 150 to 200 crore top line in FY25 from this unit.
Margins would you enjoy then? Would that be scaled up to?
400 to 500 crore by FY26 or 27, sorry.
Okay. No,
Okay.
so this 400 to 500 crores is from this specific unit you are saying, or for the company?
No, for this acquisition, Amtech Cranks, ACIL, basically.
Okay. And what about the overall company? What kind of revenues and margin levels or profit levels do you envisage, let's say 3 years out?
See, if you look at RKFL, we have already given a guidance of 15 to 20% volume growth year in year on CAGR basis, so that we stick to or get that guidance for next 3 years. And apart from that, the acquisitions, certainly acquisitions are helping us in terms of consolidated balance sheet and overall growth. As you know, we have acquired Multitech Auto that is all capable of doing 500 to 700 crore kind of turnover per annum. I have given the guidance on the ACIL. Apart from that, JMT Auto also we acquired only 2-3 months back. And that is a unit that can give me another 500 crore turnover if you look at FY27. So all these will add up and give me the decent number. I cannot give you a specific number. It will be a decent number in terms of overall growth. It will be more than 30% growth year on year if we add up on the next 3 years.
Interesting, Lalit. But the other, area where you have been going big guns is the entire railway sector, right? That MOU that happened with Titagar, and now there are reports suggesting that you're likely to manufacture over 2 lakh rail wheels each year, and you're going to export also over a lakh and a half. Talk to me about that vertical and how is the production panning out?
So this unit, we are going to manufacture more than 2,20,000 forged wheel per annum. That's the capacity we are setting up. The production will come somewhere in calendar year 26. So first year, I will say it will be mainly to supply to the railway, as we have got 80,000 per annum contract with the railway for next 20 years. But certainly there are good export possibilities, and even domestic market demand will be there quite a good number. And we feel once we will be there with the production, I think the entire capacity can be sold out by that time. So that's our confidence and belief in this unit.
What we are looking at is you have done a own capex. You also did a fundraising recently, which is organic. Plus, you are also acquiring these beaten down assets, which will turn around. I want to understand in the next 3-year period, how would your revenue mix look like, both in terms of auto, non-auto, and also overseas versus domestic?
See, coming to the overseas versus domestic, it's right now 60% domestic, 40 overseas. So we will continue to maintain that mix 60 and 40, maybe a little bit more on the overseas side, but it will largely remain in this area because we are growing both in domestic as well as overseas market. And in terms of auto, non-auto, our immediate side is to have a 70 30 auto non-auto mix, and if you look at next 3 to 4 years, we will have 60 to 40 non-auto mix, and this 40% will mainly consist of railway, oil and gas, farm equipment, and off-highway.
Sure, point taken. But before I let you go, Lalit, I just wanted to get a sense, all these railway orders which you are doing, given the competition is so high and, these orders are always infamous for the kind of working capital issues and the margin issues that come along. Are you worried about that?
No, not at all. I think it's the other way around. Margins are quite better in the railway business, and in terms of competition, you don't get competition because see, in railway it is a high gestation market, and you need to be approved by the railway, and that takes time. And everybody cannot come tomorrow and get approved for a product. So we have got those approvals, and I will say still it is a highly unorganized market where we are in, and that helps only us to be better than the competitors in this space.
All right, clearly manufacturing is in good shape right now as far as our country goes. That's why you are looking at better margins, difficult approvals, so not everybody is jumping into this even if they want to, and plus payments are coming back in time from government. That's something
that's the great thing about the railway, because payments are coming in next 15 to 20 days time from the day you ship the material to railway.
What more can one ask for? Right, which means the payment cycle is very favorable for companies such as yours. Thanks very much for joining us, Lalit. That was